Bikaji Foods came out with a set of numbers which were strong. Consolidated revenue was up about 31% at 577 crores. The EBITDA margins expanded by about 70 basis points, and the net profit consequently was up about 43%. So this the business price or the business performance was very strong in quarter two. The question is, can this momentum continue? And what is it that the company is feeling about the consumer, considering that we're seeing a fair degree of K-shaped recovery across most consumer segments? To talk about that, we have the top management with us, Deepak Agarwal, the MD, and Rishabh Jain, the CFO, join me. Gentlemen, both of you, thanks so much for joining in. Deepak, can I start with you? A strong set of numbers, 31% revenue growth. Was this something that you had penciled in? And do you reckon the momentum can continue into quarter three and quarter four? Because people are now talking of a rural recovery as well.
Yeah, as the raw material prices and other metal prices are cooling off, so we are looking for the same margins or better margins for the next 2 quarters. But also we are focusing on our market share and on our focus markets to get some market share. So this kind of EBITDA margins will be the same.
Okay. Deepak, just one more follow-up before we get to before I get Rishabh in this conversation as well. What about the top line growth? 31% growth in revenue is a strong number. What led to this? And what is your anticipation from quarter three on the revenue front?
Next 2 quarters, we are looking for the same numbers as HY1 what we have closed up, and the same numbers we are targeting for the HY2.
Okay, interesting. Rishabh, what led to this kind of growth in quarter two? 31% revenue growth.
Yeah, so largely so festive season is in quarter two, right? Diwali is in October 23rd, so we have seen a good sales in quarter two. So that's what we've seen, a very strong and healthy growth across all category in bhujia, namkeen, papad, sweets, and we've seen a very healthy growth. And in quarter three and four also, we are looking good growth in coming quarters. But yeah, of course, the same 31% growth. So there are some sales which is preponed due to Diwali season in September. But yeah, we are looking very strong growth in quarter three and quarter four also.
There's some mention of how the CSD channel, Rishabh, would have contributed starting quarter two. Can you tell us a bit about this opportunity firstly? What kind of contribution came in quarter two, and what do you expect it to do in the quarters ahead?
See, so we just started in quarter two, in mid of quarter two, CSD channel. It's a big opportunity because this business is very big. So in FMCG, we are targeting close to 100 crore business in next 2.5 3 years. That's a single category from single CSD. That's what our target is, and it's a big opportunity for us. And we are just entered into CSD.
Okay, Deepak, how large could this opportunity be? I know it's large, but there is some information of the CSD having some 30,000 stores. You just started off. How do you plan to scale up this opportunity, and how large could it become, let's say, in terms of some number indication, if you can give?
Rishabh has just given the numbers, like, we are targeting in next 2.5 years around 100 crore rupees plus. And,
Okay.
The CSD is and other institutions are, doing very good. And in next 3 to 5 years, institution sales are, growing up, and other, even including the modern trades and other trades. So we are expecting a better results.
No, sorry. What I was just hoping for was that you have a target of 100 crores. Does it mean you will tap into a particular number of stores for this 100 crore? I'm just trying to understand, based on how many stores you tap, what is the kind of revenue rate that you can get, and therefore just trying to understand how large could the opportunity be.
See, firstly, we always tap our existing core markets, like, in the CSD canteens, even where in Rajasthan or in, Northeast, Bihar, or nearby the Rajasthan states. So first we target those, states, and we will focus with our, better shelf, presence, and with our, services to the CSD canteens and other stores. And then we will go to the other, markets or focus markets in all India wide.
Okay, just a follow-up, Deepak, before I can get back to Rishabh. you are a market leader in the family pack segment for sure. About northwards of 60%, if I'm not wrong, is your market share. Now, how do you anticipate to consolidate this or improve upon this in the quarters to come?
See, our family pack is always doing good, and now as in our focus market, what we have identified like Uttar Pradesh and Karnataka and some NCR, Delhi. So there we are expecting to get the market of a small pack than the family pack, and family pack is growing in institutions like modern trade and e-com business, and these are the platforms where family pack is growing very well. There the ticket size is very important. So those markets or those channels where we are targeting more on the family packs, but on our focus markets we are targeting more on the smaller packs.
Okay. Okay. Rishabh, is there a demand dichotomy that you see? Because across companies that we've spoken to, there is a conversation around how the recovery has been K-shaped of sorts. Wherein the upper end and the urban metros, tier one cities have seen good demand, not so much in tier four cities and rural markets. There is a belief that that has started to change a little bit. Parley was talking about this last week with us. What has been your experience on the consumer end? What is the kind of demand that you're seeing from what kind of consumers? How do you expect it to shape up?
So largely, we are looking very good demand from like our core market are Rajasthan, Assam, and Bihar. These are core market where close to 70% of our business comes from these three states, and we are looking very strong demand across all three core states, and these are largely
Both on urban and rural.
both, and largely like you will see Bihar is largely rural market. In North is largely rural market. So we are looking very strong demand in rural also, and in going forward also it's a big opportunity because see we are this category is very big. This category is close to 1.5 lakh crore market, and we are and it's largely unorganized, 50% more plus 50% unorganized. So of course it's a big market. It's all upon execution, how well we do execution in doing your RTM strategy right, distribution strategy right, and that's how we want to focus on. That's what, yeah.
Okay. Um, uh, Rishabh, a word on the margins. Obviously, raw material
Yeah.
costs have come off a little bit. In your case, advertisement and promotional expenses also play a part. Your ad is a bit of a lot of people talk about the kind of advertising policies and the ads that you guys have put out as well. What's your sense of how would the advertisement and promotional expenses be in quarter three and quarter four? And since
Yeah.
raw material costs are coming off, what would it do to the margins?
See, so basically now quarter one, our margin was close to 7.4% EBITDA, with an EBITDA. And in quarter two, you see our EBITDA has moved to 11.1%. So that's what margin expansion we're seeing. It was because of two reasons. Of course, one is raw material pricing because we have seen cooling of the prices of edible oil, and we've seen gross margin expansion close to 3%. And of course, we are also doing many other things to improve efficiency in across all other expense, be it ad expense, be it people cost, and everything. We are building some efficiencies across it. So that's how we will see our EBITDA margin has expanded close to 4%. If you compare from quarter one, so we are working on this, and of course in coming year also on ad expense largely we are targeting close to 1.75 to 2%. That's what we park the budget because it's very important for us to do a branding of Bikaji. Ultimately, that's what our family pack is. We are building on family packs, and that's what we go in-house brand. We are in-house brand. We're not a 5 rupee, 10 rupee brand. So we are building a brand from that perspective. That's what Amit ji comes into picture.
Sure. I was wondering if his name will come up in the conversation. But just one quick follow-up, Rishabh. Do you expect to maintain about 11% margins in the coming quarters or better improve upon these?
So see, of course, our target is to we have two targets basically. One, increasing market share across all because we are seeing very big market gain in our core market. And number two, of course, we want to do this number in coming quarters also. This 11% is our target, 11 to 11.5%. That's what we are taking target in coming quarters also.
Okay, so you hope to maintain the margins in about 11 to
Yes.
11.5% mark.
Yes.
Okay, great. Deepak, one quick mention on the PLI scheme benefits as well. There's a lot of talk around you availing those benefits too. Can you talk a bit about Bikaji and PLI and how would and what is it that you would do? Because I think you have received approval for incentives and related to branding and marketing expenditure as well, and a lot of things. Can you talk a bit about this?
See, last year we got a PLI scheme from the government, and where we have committed to invest 430 crore rupees, and the government will subsidize us 260 crore rupees in next 6 to 7 years. So the PLI scheme is on the CAGR growth of minimum at least of 13%, and we are on the same track. And with the PLI scheme, we have expanded, aggressively the manufacturing units. Like till last year, our location was only at the Bikaner, but now we have expanded to the Assam, Guwahati, Bihar, Muzaffarpur, and one more is coming, Patna. And recently, we have, our contract manufacturing unit has opened at Kanpur, and in South India, near Bangalore, Tumkur, we have expanded our ethnic snacks, plant expansion. And so these are the few things. And one more frozen unit is coming in Bikaner, which is, very big one. And so that all helps from the PLI scheme and from the subsidy. And in also they have given us a subsidy for the marketing and to be a global player in export side. So if we do any advertisement, the government will subsidize us 50% on a minimum level of spend, and they just wanted to be a global players in some of from the Indian markets.
Got it. So, Deepak, you reckon you will deepen your penetration in the existing markets on the global side, or would you need to tap newer markets? Because I would reckon that the kind of growth that companies have to deliver under the PLI benefit schemes, the growth needs to be fairly fast clipped year over year. So, how do you expect to achieve this?
So,
See,
Neeraj,
yeah,
yeah.
Rishabh, please.
So, what in PLI, the government want to grow us at 13% CAGR, and we are growing at 20% plus CAGR from last
So
many
that's not
years.
a problem for you.
So
Okay.
that's not a problem at all. There are two conditions basically. One is growth, and the other is investment, which we are committed 438 crore rupees. So that's what, and we are on track on this.
Okay, great. Thanks for that clarification, Rishabh. My final question. You've given us some sense of what you expect to do as far as FY23 goes, because I heard you mention that even if it's not 31% growth, you expect fairly strong growth over the next second half as well. I want to understand, you guys have spent a lot of time and effort and money in setting up a strong distribution chain. You have 2 plants coming on stream which help you access the namkeen category and some more as well. What do you anticipate growth rates to be like over the course of the next 2 or 3 years? Maybe you've spoken this during the IPO time, but since we're talking for the first time, I would love to understand.
So largely, see, of course, the 31% growth is basically also due to festive season. But yeah, we are targeting minimum 20% growth. That's what our target is in coming quarters, and also in next 2-3 years. That's what our target is. We need to grow at 20% because this industry is growing at 15%. If you see a Nielsen or other report, this category is growing at 15%. So we, being a market leader in this, if we cannot go at 20%, so it's a waste of opportunity for us also. So we want to grow at 20%. That's what our target is.
And you reckon you will be able to do this while maintaining, unless something goes horribly wrong, you'll be able to maintain margins on an annual basis as well?
So we have done from last many years. We will see from last many years we're growing at 20% plus CAGR, and that's what our target is. And we want to grow at this pace, and we want to in much faster pace. And that's what we are not targeting 15-18% EBITDA. We're targeting 11-12% EBITDA, but yeah, gaining market share is more important for us right now.
Got it. Okay. Deepak as well as Rishabh, congratulations on a strong Q2 and wish you all the best for the quarters ahead. Thanks for talking to us today.
Thank you.
And viewers, thanks for tuning into this conversation.
Thank you.